Right. Good evening, trader. Today we're going to introduce further to what we've been doing daily. It is a sniper on a shorter time frame. Today we're going to introduce a more accurate way of placing a sniper trade on a long term, on longer time frame. Normally that uh, has been shown to have an additional accuracy. So normally the signals that we normally receive, we normally place them either in a 15-minute time frame or a 30-minute time frame. Now we want to introduce, shift gears and introduce longer time frames, like 1 hour or even 4 hour, that normally has increased level of accuracy. No, we need to take a profit. So I'm just going to introduce the topic, and then later coach will come in and give us additional information on this strategy and how we will be able to take advantage of it. So the whole idea is maybe you want to trade and you do not have time to sit in front of your computer and watch your trade all day. So the whole idea is you wait when the market is consolidating. Yes, so the whole idea is for us to be able to increase the accuracy of our trades. So basically, when you do not have time to sit in front of your computer and do scalping, which I like, then you can use this strategy to place your trades and then shoot for a particular number of pips for take profit. You shoot for a particular number of pips for take profit with much accuracy. Again, we say don't chase the market. Let the market wait for you. And we target some particular consolidations, like, before the London market opens, which in our time is usually about, right now it's usually about 10 o'clock. But now that summer is ending, when we go back to the normal time for Britain, then it could be 11 o'clock our time. So depending on the time of the year, it could be 10 o'clock our time or 11 o'clock. All right. So I'm going to jump straight to the chart so that we keep it short, and then I'll let Coach come in to show you how this type of trade is normally done. Just give me a minute. I hope you can see my chart. So normally what we do before we place this type of trades, we look at longer time frames. Like now, for instance, just as we are preparing for our class, I opened Euro USD and I was basically looking at the weekly time frame, and I have marked the major turning points for the weekly just to give me a guide if I was to place this type of trade. Then I watch out on where the market was turning, or where the market was stopping to respect the support and resistance zones. So once I have known those zones, then I come down to the lower time frame. This is now the daily, and basically I look at areas where the market slowed down, where the market tended to consolidate, where it was not moving up. Like you see in this particular area, you can see already it's going up. Here it's going up. So once I get to those areas, like now here, as you can see, it is slowing down. I think because as we approach the Asian market, the market normally tends to slow down considerably. So you'll find that by the time you're waking up tomorrow morning, around this time, this is the 4 hour, the market will not have been moving a lot. So normally what we do, assume this will continue for the rest of the night, we normally mark this area to show us the last high and the last low that that the market was playing with around that time. So assume this is dead in the night, from midnight, 1 o'clock, 2 o'clock, and assume the market will just be playing around here, playing around here. So by the time the London market opens, then looking at the weeks, let's say now I go down to the 1 hour, you'll find that most of it will still respect uh, the the rectangle that I put, but now I expand the rectangle to include the weeks, to include the weeks. So let's assume it's around this time. So around this time zone, the market will just basically be have been playing around here. And then what I do is when I want to place the trades, given that I'd already marked the major turning points of the market, I know that as you can see down here, the cost is very clear. It's very clear. If you are a sailor, then here you almost like a free reign. Free reign. You have a lot of pips you can play around with. So because this is a long-term trade, then you can shoot for quite a number of pips here, because you look at the last low, and then you try to go to the left. Sorry, my charts. And then you can take profit as far back as the last time you went. As you can see, it must have been quite a while back. I think it's here. This is on the 1 hour. So if you were to take profit here, then probably we'll enter the trade after this last week and take profit. So this shows me about 43 pips to the last low that happened on this Euro USD. If I was to take trades, then I can play around. I have free will from this last week to the last time the last low was reached, which I've shown you a while back, which I've marked here. So from that distance from where I've marked to here is 44 pips. So you can imagine the number of the amount of profit you can take when that triggers, and it obeys. It goes back and revisits the last low that it had. So I think at this juncture, I would like to welcome, coach, so that you can add us add some additional information on this strategy. And then now going forward, this will be the strategy you'll be using. So you'll not be seeing either 15 minutes or 30 minutes, but you'll start seeing longer time frames, either 1 hour or 4 hours. So welcome, coach.
Okay, thank you, Ken. Now, the reason why we are introducing the longer time frame essentially is to allow people to go ahead and set their trades and follow up on what they need to do during the day. Because I think initially there was an indication that many people either have day jobs or something, so they're busy, they don't have time. Okay, and our sniper trades, the way they're set up, are actually supposed to be even better, working better for such people, because then the only time they can trade is maybe once in a few days, not necessarily even today, not necessarily daily. Okay? So the length of the trades are more likely to be at least a day or two, or even roll up to 3, depending on if the trade is on the 4-hour. So what we shall do is, like Ken has said, we shall be using a bigger analysis, which means that most of us now in the team will be doing analysis for the weekly. We shall be looking at the weekly charts, okay, and then come down the daily, and then come down to the 4-hour. Now, we are likely to actually take the trades on the 1-hour. In the event that it is not looking realistic on the 1-hour, then we'll do the 4-hour. Okay, but the traditional, okay, our strategy will be to make sure that you have your trades in 4 hours. Now, what does that mean? It means that when you take your trades on the 4-hour, it is very likely the trade will not trigger even the same day. It might take a day or two. Unless there's a lot of volatility, then it might. But the beauty about this, then usually it is has better, higher accuracy than the smaller quick trades we've been taking. So yes, we'll set up our trades in a longer time frame, but I'll also be indicating if it's 1 hour or 4 hours. So in terms of process, and this is where you need to be alert, what process are we going to be using? What do we need to know? What we need to know is, first, there's no shortcut. We have to do the analysis. And the reason why we are still doing the analysis initially is to train you on what we call best practice. Okay? So going to the charts is normally a best practice thing. We have to make sure that you are learning the best practice. So I will go to the charts. Then if you can get me back the presenter, because I can't find the presenter bar. Let me see. Oh, okay, I think we're fine. All right, very good. Okay, Spotware. Okay, I'm assuming you can see my chart. And again, I will stick to Euro USD. At this juncture, I also want to mention about the other currency pairs, because now we are looking at a longer time frame. Okay, the currency pair or pairs don't matter very much. Okay, whether you like GBP, USD, or Japanese yen, Swiss francs, Canadian dollars, Australian, whatever, it's up to you now. You can pick whatever currency you want, as long as you follow the process. And so here is the process. The first step you do, again, first step, you go to the charts and go to a longer time frame, which in this case, the weekly time frame. So the weekly time frame will set the tone. So you open up a chart, weekly time frame of the currency of choice, and then you minimize. If you look at the screen on the left-hand side, how do you minimize? You minimize by looking at the signal, what do you call this symbol here. Okay, just 1 second. Right here, those two symbols. Okay, one is to magnify, one is to minimize. So you go to this minimize, and that allows you to look at the whole chart over a long period of time. So if this is weekly, essentially we have in front of us from 21st July 1991. I think quite a number of you are not even born then, maybe. All right, that's how far back it goes to the current time. That's a lot of data, a lot of data. Now we have to respect that because it means a significant turn on the weekly, maybe it happened in 1991, might still come back and actually be as critical today as it was in 1991. All right? So that's why we do that. We actually go back and make sure we mark those turning points. So then how do we do that? Well, we do it the way we've been doing it before, which means you go to the last high and the last low, but remember your point of significance, your point of interest is to the right-hand side, which means something that happened in 1991 might only be significant to you to the extent that it is affecting the current time, which in this case it would. If this currency in 1991 was way, way, way lower or way, way, way higher from the current price right now, then we'll not worry about it. But right now, if you look, I think about in 2017, May 2017, on the right-hand side, the market was around there. Okay, and that, if you look, has been significant for a while. Okay, so you go ahead and you mark your highs. Okay, and as you can see, I'm not taking too much time thinking about them. I mark my lows. So it means since the beginning of the markets, the currency has never reached beyond 1.505942. And the day it will be important. It will be very significant, right? Then other turning points that are significant, we mark them, okay? And when we mark them, we also try and use a different color to signify, to help us in terms of identifying easily. We can say it's a very, very significant turning point. So for the sake of our class today, I will not mark the others. Let me just put one more. I'll put this one here. Okay, so we have 1, 2, 3, 4, 5, 6. So then I'll go ahead and change the colors. Okay, I saw maybe thicker and change the color. I think I saw Ken used, it was blue or, okay, so I'll use green or whatever that color is. Okay, I'll make it thicker. And why is that? The idea is for us to be able to identify that it is a significant point, okay, on a higher time frame. In other words, we give it respect, the respect it deserves. Okay, so we mark those points, we color them accordingly, and that's what we are doing. What we're doing here is hope that you will eventually be able to do this on your own. Eventually, but for the next few weeks or so, we will be doing it for you daily, probably over the weekends, and sending them to you as signals. Which reminds me that many of you have not subscribed to the signals. And those who have subscribed, just a reminder that your fee for the month of September is actually due. Okay, there are many of you, I'm normally very flexible. The many of you need to catch up with your fees though. So just an FYI. All right, so this is the weekly support and resistance zones. Once we have that, then we drop down to the daily. The daily, okay, and then find out if there's anything significant. Now, our point of interest really is on the right-hand side, okay, where the current price is right now. So if we are to add a few things here, it might not be much. It might be there. Okay, and then down the turning point there. Okay, my interest is actually up here. So I could mark more down, but I don't see the importance of marking them down because price is not near there. But where price is, I try to focus. Okay? And so these ones, I will make them a different color. All right, so we have 1, 2, 3, 4. So we have 4. All right, and now we'll choose another bright color. Important. Let's put yellow. Okay, then this one, yellow. This one, yellow. And finally, yellow. So, okay, now we have the yellows. That's good. Now, we then go down. The idea of having looked at weekly was to give us more of a bigger hindsight. And then daily to look for anything that could have been significant, like a consolidation, a turning point, or what, Then we can now try and go to a smaller time frame, which is 4 hours. So we want to trade on 4 hour or 1 hour if we see anything. But looking at the daily, what do we see? Again, the point of significance is on the right hand side where the price is currently. So we see there's a lot of consolidation around the right hand side, which is now of significance for us. We say, okay, fine, something is happening on the daily. Look there, see consolidation. The price came from these zones. Again, remember we were in the other classes or even in the other forums, not forums, but in our lessons before, we numbered this as zones. We could have zone A, zone B, C, D, E, and F. So essentially, price is playing around zone D and it is consolidating, which means if we go to the lower time frame, 4 hour and 1 hour, we should find opportunities around there because there's a lot of consolidation there. All right. So I'm going to go down now, look for opportunities to enter on the 4 hour. If I don't see them, then I will go down further to the 1 hour. All right. So I'll go down one more. Okay. So we come down to the 4 hours. And there we are. Now, if you look at the 4 hour, clearly there is opportunity. Okay. There is opportunity because the market is consolidating. It's consolidating around certain areas. And that area it's between this low here and that high over there. So is the market going up or down? We don't know. Okay, but if we did put our other lines, sometimes we can put parallel lines, which can help us do a bit more analysis. So we can do another parallel line like that. Okay, and you are only touching the bodies of the lines, of the bodies of the candles. So it seems like, what is this? Oh, I think I must have put something there that was not there. So you get your trend line and draw the line there. So it looks like in the 4-hour larger time frame, the market has been oscillating on a trend line, on a channel. This is a channel, we call that a channel. Okay, where it's the low is along that trend line and the high is around there. Now, for us to take a trade, we must see some kind of consolidation somewhere and then a potential breakout. So I think a few days ago, we could have timed this point here. We could have timed this channel that formed here. Okay, this one for a breakout. All right. So in this 4-hour, this is what we could have timed, but that was a couple of days ago. But now, this one and this one, it seems like there will be a breakout eventually, either at the bottom side or up. We don't know. And that's where normally we jump in. The sniper trade idea, again, principle, is you measure from there. Okay. Now, this time around, we measure about 20 pips from the last low of the channel and 20 pips on the high of the channel. And then you enter your trades. Okay. So as you enter the trades, okay, often you can take clearly 20 pips, or you look on the left hand side and see when was the last significant point, support or resistance. So if it was here where we have this line here, then that is good, because it means if we take our trade here, chances are it will take profit by the time we get there with our 20 pips. All right. Similarly, at the top there, if we are to take a trade, chances are we will take our profit before that significant point. So the signals will be the same, the analysis the same. The only difference now is it is longer time frame, which significantly have a better accuracy than the other. That's number one. Number two, because now the markets are not moving very, very quickly, chances are you can easily kill the other trade, because they're giving you both up and down. Once you realize the market is not going up, okay, and you are both on an up and a sell, then you kill the direction where the market is not going. So unlike before, where the market would go down and then come back, now this time you'll be able to know for sure within a day or two that the market actually is going up. So you kill the other one almost right away to minimize your losses. So this should be much, much better. And once you know the direction it's going, other people have taken more trades to support that move. Whether it's an up move, then you take more trades going up. If it's a down move, you take more trades going down. Okay. But like I said, the most important thing is the principle, the process that which you have to go through to make these trades, work. So in this case here, if we were to send signals maybe over the weekend, they would have probably have come from that consolidation up there. Like I said, on the 4-hour. Sometimes you can go down to the 1 hour to see if there's anything that is more clearer or has a better clarity. By that, we are saying for these trades to work out well, normally you have to have a good entry. Again, for longer time frame, okay, you need to have a good entry for it to work well. Hence, like I said earlier, like this particular one here, this would have been very, very good. Okay, so we would have taken buy up and a sell down. So it's not very, very clear there or there, and the same thing there. So as you can see here, clearly, even if the trade would have triggered on the bottom side, this one here would be our worry, that thing over there. And that actually is 33 pips, which means if you had taken your 20 pips down, okay, 20 pips before you take a trade, 20, and then you take a take profit of 20. Now, this would have been, by this time, for those 2 or 3 days, you would have probably taken profit of that, okay, even if it didn't reach all the way. But if it's going up, the same thing, okay, this is about 58 pips. Okay, even this wick here, the wick is 47 pips. So again, the same thing, 20 pips before you take your trade, 20 somewhere there, okay? And then from there up, you're taking 20. So again, you'd have taken your setup and taken your profit before even the market reaches the high, all right? So I'm just sharing with you the kind of accuracy the higher time frame comes with. All right, this other one here would have been a bit weird, but again, the idea is the same, principle is the same. So if you were to draw your rectangle, okay, same thing. Okay, you're looking for a breakout of the market either way, up or down, okay, because this point has been significant a few times, and this up there has been significant a few times. So here, you can take trades down. On the upper side, okay, on the upper side, you could still do the same thing, but you can also take advantage of the channel we have here. All right. So, in principle, there's no difference between this and the sniper trades you've been taking. The only difference is now it's a longer time frame. They'll last a little longer. And having said that, I think I will make it open for questions. And I've just been reminded that we have about 5 minutes on the clock. So, questions. So can I just mention, if there are no questions, or even as you're still thinking, you'll have to learn to take advantage of the tools on the right-hand side, okay, to draw your maybe trend line, your support and resistance, you know, use the rectangle to try and box in your consolidation, okay, even however small they are. On a larger time frame, it is okay, right? But you have to learn to draw on the chart, just to draw on the chart so you can have an idea of what's going on, so that you trade what you see. Trade what you see, not what you think. All right. Any questions? It's the same thing. Effective tomorrow, we will set up the trades, okay, a little more differently, and give you a chance to ride with this. Maybe in transition, I will ask Ken to continue doing the smaller time frame, just the usual one, the way we've been doing, and then I will also, produce the longer time frame. But the longer time frame will not be coming out daily. Why? Because some of the trades will take a long time, maybe a day or 2 or 3. I don't know. Yeah. So for now, hypothetically, we'll be taking the setups on Sunday, which means they can come out on Monday. And once you take your trades Monday morning, then you don't have to worry about them until they take profit. So then you'll probably be looking midweek to see if there's need for more trades, if those ones have not triggered or they have triggered. Okay. So, and hopefully the profit will be better. Okay, any questions? No questions. All right, I think you're still digesting, huh? So the class is recorded. You can, the class is recorded, so you can review the recording later. Okay. In terms of taking the trade, it's the same way you are doing the taking your trades. The only difference is it's on a higher time frame. Okay, I don't see any questions. Then we'll just call it a good night. Good night, and hopefully, as time goes by, we hear. We'll get feedback from you how it's going. All right.
Good night.
Good night. All right. Good night. Thank you.
Thank you. Good night.
Good night. Good night, Ken. All right. Good night, all. All right. Good night.